Welcome investors, and thanks for joining us for the forecast where we decipher the market so you can be in the driver's seat with your investments. I'm Jake Ackerman. Big rally in the markets following the Fed meeting despite them raising interest rates by 0.25% and saying they're going to hike rates at least another 2 times. The market rallies despite Amazon, Google, and Apple missing earnings. Facebook does have a really good earnings report. But what is the cause of this big rally? Even though interest rates are being hiked, monetary policy is being squeezed. And it all comes down to Jerome Powell's press conference, where he said the words deflation. All right? So we're fighting inflation. He's seeing and acknowledging there's deflationary pressures. Okay? So what else did Jerome Powell do that caused the markets to rally? His tone, his demeanor. In 2022, he looked like he wanted to hammer the markets. He wanted to bring them down. He wanted to keep monetary policy tight. It appears that he seemed joyous in that press conference. He looks like he's defeating inflation. He's acknowledging. He seems happy of the way that things are proceeding following that tight monetary policy. I mean, the tightest monetary policies really since we've seen in the 80s. And the market could sense it. The market could sense the optimism coming from him. The defeat of inflation is coming, is what he projected onto us investors. What else is happening? So we have a hawkish Fed, but a positive tone, and they gave us a timeline of when they're going to stop raising rates. I mean, it appears that way. Obviously, more inflation data could change that timeline, but that's what it looks like right now, and the inflation data coming in has been coming down. So with big companies missing their earnings, why is the market rally? You'd expect a really big sell-off after the biggest names missing earnings reports, which it may proceed, but for another reason, and I'll get into that here shortly. It's because of the guidance, the forward guidance, that they're seeing the inflation pressures, high currency, the dollar's values coming down, inflation pressures are dissipating, and these big companies are shedding employees and some excess weight that are expenses that weren't really necessary. So they're going to tighten up and really focus on the core of their businesses, and the market really likes that. And then you'll have some other big companies doing stock buybacks, and I can tell you the stock market really loves stock buybacks. So what's happening now? Where we're at, we've had an enormous rally the first half of this year through the month of January, and I said a few weeks ago, so goes January, so goes the year. We've had a really optimistic January, but at this point, the market has rallied so significantly, we're starting to get overbought signals. And generally, when you get overbought signals, you get a sell-off in the market where the price comes back down. Doesn't mean it goes back down to the lows. The trend has changed at this point to an upward trend. But price doesn't go up generally in a straight line, okay? It's going to have pullbacks along the way. And when the market's overbought, it's ripe for a pullback. But it's something different happening right now where, I would say, hey, there's a really, really high likelihood of a pullback. And I still do think that, but it may not be over. This rally could have a little bit more what they call legs, a little bit higher. And the reason for that is everyone's talking about the market pulling back right here. People are buying puts, means they're expecting the market to go down. And when a lot of people are on one side of an investment or what you call a trade, the market likes to do the opposite. The market likes to cause maximum pain for short-term investors. And that's why we don't necessarily trade day to day. We just invest in areas and prices. Okay, so it's market's looking overbought, but we have a lot of people on one side of the trade expecting it to go down. So we could go a little bit higher. And what would that cause people to do? Well, first off, to get to where we're at, a lot of people were on one side of the trade going into the Fed meeting. They were expecting the market to go down. Well, what happened? The complete opposite happened. So the people that were betting the markets were going to go down missed out on this upside. And what we're seeing is them continuing to now hope the market goes down, so they're putting in more sell orders on the downside. So we need to see those folks transition their mindset, and it's an emotional response to the market. The market sentiment can change so fast in a blink of an eye. One day is a completely different investing day, a trading day. So we need these, most likely these people are going to get a common emotion that a lot of investors get, and it's called FOMO, and that is fear of missing out. So once these people that have missed the trade, attempted it again for hoping the market comes down, eventually they give up, they feel the emotional FOMO, and they start buying the market at the top, and that's when we can come back down. And as professional investors, that's what we're waiting for. So what are we doing? You know, if you watched our channel here, we've been buying all through the end of the year, and now we're starting to take profits on our investments at this point. We're going to free up a little bit of cash where if it goes a little bit higher, we'll continue to do that, and we'll let the market come back down till we can get a good price area and let the emotional traders, unfortunately, that's called a whipsaw, they'll end up missing the boat. They'll buy at the top and then sell at the bottom. But as professional investors, we'll wait, we're patient. We're going to take our profits as the market rallies up, and we'll patiently wait till we get a good price again. So we'll tune in next week, see how this all unfolds. But an exciting first half of the year, and as of right now, as January goes, so goes the year. Tune in next week. I'm Jake Ackerman. Expertise you deserve, experience you can count on.